Good morning and welcome to Fact Friday. This week you will see that I'm joined by Alexandra. Alex, before we get going, I just want to say huge congratulations on becoming president of the Kent Law Society. Very well earned and very well deserved.
Thank you so much, Michael.
So this week we are looking at inheritance tax or IHT upon death. And there's two questions for you today, Alex. But before we get going, do you just want to expand and explain in brief the basics of inheritance tax?
Yes, of course. So everyone has an allowance that they can set against inheritance tax called their nil rate band allowance, and that is currently worth £325,000. There's also another allowance called the residence nil rate band. That's not available to everyone, though. That's only available to people who own property or did own property before the 8th of July 2015. They must also have children or remoter descendants who will benefit from that property in their estate. The definition is very wide. It includes foster and stepchildren. Also, their estate must be no more than £2 million in order to benefit from the allowance in full. So for every £2 that your estate goes over 2 million, you lose £1 of the allowance. Now, this residence nil rate band allowance is currently £175,000, and it is based on the value of the property in your estate. So if your property value is over £175,000, it is capped at that. If your property value is under £175,000, then you don't get any more than the value of your property. So those two allowances together, if you qualify, will give an individual £500,000 free of inheritance tax, and anything above that will be charged at 40%.
Excellent, which brings us on nicely to our first question is, are there any exemptions from IHT?
Yes, so you can have spouse exemption and civil partnership exemption at 100%. Also, charity 100%, and business relief is either at 100% or 50%. If we just use an example just to explain how the spouse exemption works, if you left everything to your spouse on your death, that will be completely free of inheritance tax, and you won't have used either of the two allowances above. That means on the death of the survivor, not only do they have their own nil rate band and residence nil rate band, they can also transfer the unused allowances of the first person to die, which means that instead of having £500,000 allowances, they can have up to £1 million to set against inheritance tax.
Excellent. And the second and final question today, Alex, is, does the country of domicile affect the inheritance tax which you pay?
Yes, it does. So very, very simply, domicile, the term domicile is the country that you treat as your permanent home. So if you are domiciled in the UK, then you will pay UK inheritance tax on your worldwide estate, so any assets in any other country. If you have been a tax resident here for more than 15 of the last 20 years, you're also deemed domiciled here for inheritance tax purposes. So you will pay inheritance tax on your worldwide estate. If you're not domiciled here, then you will only pay UK inheritance tax on your UK assets. And something to watch out for, if you have a couple where one is domiciled and one is not, any assets on death passing from the domiciled spouse to the non-domiciled spouse will not get 100% spouse exemption. It is capped at £325,000.
Excellent. Madam President, it's been an absolute pleasure having you on Facts Friday, and I hope everyone can tune in next week where we are looking at lifetime gifts. See you soon.